What's going on, guys? Quick little trade idea here going into FOMC. What I'm looking at is Tesla to the short side. Now, we could absolutely rip or we could drop a little bit more. So what I'm looking at here, my thought process is we've been trading below the hourly 20 SMA now for 1, 2, 3, 4 hours in a row. This marks the 5th hourly candle. So we're kind of bear flagging down here, whatever people call it on social media. What I'm looking at here is the previous hour's low. Now, if we look at the previous hour's low wick here, that price is sitting at around 256. Even though that's around $1.50 less than what we are trading at now, if we look at the space that we have below 256, we've got room down to the lower Bollinger Band sitting at around 254. So that's almost a $2 move. Now, we don't have to get to $2. If I get into this trade with 10 contracts and I'm up, 80 cents, 90 cents, $1 on this, I will start scaling out as fast as I can and locking in those profits. I just understand that this is our support. This is where we could potentially bounce. Now, if we do break the 254 mark, we've got a hard support here at 252.73. That's where I would leave my runners with intentions of trying to target. Now, if we do rip face, let's say we do drop below, maybe we go down 50-60 cents and you get into the trade, you make a little money or you lose a little money and you get stopped out. If we do go up to the upside, I cannot get into this until we clear out these upper levels of supply. Upper levels of supply is going to be the 20-day moving average on the 1-hour time frame. It's also the linear regression. And look at this declining 10-day moving average. I'm looking at the 7 a.m. Pacific Standard Time candle, which is going to be 10 a.m. Eastern Time. I'm looking at this high wick here of 261 and a quarter, 261.50s. Anything over 261.50s has room to come back up to test the upper Bollinger Band, which is also the pre-market highs of 264. So if the market wants to completely rip face, we need to get over that 261.50s, 261.60s, and this is what we're going to be selling into. If we do lose the previous hour's low, we're going to be selling into the next support. That's how we play it. If we do break down completely below 252 today, again, leave it on, continue to just rack up the profits. Your next target is going to be way down here. But again, you're going to have to look at a different time frame because that's about 15 points below here. I don't think we drop all the way to 245.90. I'm just letting you know that if we do break below 252, you want to be taking profits on that break for sure, especially if you're in from a price point of 256. That's just my little analysis and something for you guys to kind of watch going into FOMC. So we got the break over supplies here. We want to get over the 261.60s, or we want to break the previous hours low here, the 256s. Those are the two plays that I'm looking at. I'm looking to scalp them, not looking to say, hey, if we break long, we're going all the way up to 290 today. I'm not looking to say, hey, if we break, previous hours low, we're going down to 240, 250 today. Let's just try to get $1 off these things. Let's get $1.50. Let's get $2. Let's get 80 cents, depending on your position sizing. Size yourself appropriately, control your emotions, and let's try to make some money on this trade.